Hey guys, what is up? Today we're going to be getting into how tariffs can affect stocks. So let's get into it. This is a disclaimer just saying this is only for financial educational purposes only. So just read this if you would like. First off, we're going to get into what is a tariff. A tariff is just a tax on imports. And the thing is, they can make foreign goods cost more. They can increase the prices of products in stores. They could, they also protect local industries as well. So tariffs are also, they also disrupt the market. So when an unexpected tariff happens on an economy like the US, it can affect businesses as to their outlooks, as to how they're going to see how much they're going to make on profit per product. Now if a company has a tariff on a product, now they have to, incorporate into their financials that they might have thinner margins, or they might have to increase their prices to maintain those said margins they had before. And that can make the markets real wonky and really do unexpected movements and high volatility, just because of the unknown effects and or severity of how much potential tariffs can do in the economy. And a lot of people right now are obviously under a lot of a little bit of stress of not knowing how the tariffs are going to be enacted on American stores and American products in general. So this is a pretty relatively hot topic right now, and a lot of it's being day by day for the most part. And in August, I know right now, the first week of August, there should be, right now, as of at least, some new tariffs. So, and I'll go later into that throughout the slides, but I think we all remember this photo from earlier this year that kind of feared a lot of people with the reciprocal tariffs. And it did a huge shock to the stock market, because I remember when this initially came out, people absolutely lost it for the most part during that week, because it was a lot worse than people anticipated. And let me pull up the chart real quick. So this photo goes into how much people freaked out for the most part when Liberation Day did happen. For the most part, though, it happened relatively at the bottom, like down here. But going into it, people kind of knew the tariffs were coming, because they're always talked about, and it kind of did this gradual decline. And then when the big news came out, it sharply dropped. So the markets definitely do not like the tariffs. They definitely do not like the announcement of the tariffs. They went down, as you can see in this chart. It doesn't show it, but I remember it being like relatively 20% down. So it took a big toll on the market. Now I'll get into later as to why it rebounded, as most can see, but I'll get that into a later slide. But yeah, this further goes into it, how tariffs trigger volatility and unknown swings that could happen in the market. And a lot of time for most people, when a lot of this stuff happens, it does get kind of scary with people's portfolios as to them gaining a lot of value, them losing a lot of value, or whatever they're doing. But for most people, the best thing to do probably is just to hold on to the good businesses or the good ETFs, because people can try to predict, if the market's going to do really well or if it's going to do really bad. People, predict stuff all the time, and it's really hard to be always right. And most of the time, it's just best just to stay in the market, because if I go back, a lot of people during the tariff scare, especially down here, were super fearful. So many people during that time were thinking like, dang, like I need to get out of the market. I need to, the president in the office is going to just make everything tank and make it just absolutely, explode. This is the end or whatever. A lot of people were thinking that, and a lot of people got out of it just not having trust in the American economy. But, as can be seen after, that was a grave mistake. That was a grave mistake by those people that did do that. And the people that just, literally just, let me erase a lot of this real quick. The most people that just stayed in the market and bought the top right here, relatively inevitably gained a little bit. So just simply staying in the market would have got you out of all that turmoil and all that scare. It would have got the majority of people that just stayed in would have been fine. If they just held on, an S&P 500 index like this, which I think this is the whole actually S&P 500, but they hold on to, SPY or something like that, they actually would have made a small gain after all that turmoil and scare and freak out that everyone had because of the volatility that came along with the stock market. So, and this just kind of goes into show furthermore that markets don't like tariffs. They really don't. They relatively don't like the unknown and the scare of how much more prices could be from said tariff as to whatever it is. And these bar charts are actually just random ones, but you can see at the bottom overall, relatively markets go down roughly about 3%, like initially when the news comes out. So the following few days after, 3 to 4 days or whatever this calculated, it was the following few days, the market relatively almost always goes down like 3 to 4%, typically. So, and this is what I was talking about earlier. The first week of August, these are the expected tariffs as of now. This is probably going to change in the next week, but these are the expected tariffs as of right now for these products and for these countries. So we'll see what happens. I know some of these countries have been really wonky and all over the place with what tariff they're going to pay and whatnot, but this is the kind of stuff that really scares a lot of people as to having the fear of, oh my gosh, like I'm going to have to pay so much more now for this product or, this iPhone or this car or, this, that, and the other. But it's one of those things that, it just might be a bluff. It might just be one of those things that will be used as like a tactic to kind of scare other countries into, doing a deal of some sort. So we'll see what happens with these tariffs coming up soon, but that'll be seen when that time comes. This is kind of what I was saying a second ago about how sometimes tariffs can be used as a tactic to kind of negotiate in a way. The big thing with the president right now, he's really trying to get countries to lower their tariffs for us, and he's trying to scare other countries and trying to wheel and deal in certain ways. And so a lot of times it's used as like a tactic to kind of see how other countries would react and what kind of deal we can get to lower our tariffs so we could pay less for us to export into other countries. And a lot of time too, these kind of tones of speaking for tariffs will kind of change as to how much it affects the economy sometimes. If the stock market's going down a whole bunch, well then, there could be a little more lighter tones that the president can have, so the market won't go down further and so on and so forth. But the main thing is that tariffs create protection. They create protection for these local economies that we got in, or the overall economy too, for the United States. So Big thing is if America wanted to protect steel and we put big tariffs on steel, I like the example below, that we want to protect U.S. steel, we could put a 20% tariff or whatever it is on everybody else so we could protect our own industry. And instead doing so, we'll protect our own jobs. And that's kind of the main thing, would just be people trying to protect, the local jobs or I guess the nationwide jobs. So, but then you have the other consequences of, then steel's going to cost more, and then so on and so forth. You get all the way down the line of the supply chain to buildings will cost more. But a lot of people, economists who advise the president, whoever does the tariff, will have to tell them like, hey, like, these are the pros and these are the cons, and they would have to weigh out if it's worth it or not. But essentially, one of the main points is the protection of the nation's jobs and the protection of the nation's companies, our companies here. So, and tariffs a lot of time can be like weaponized, during these trade wars. As of late, a lot of people seeing the talks between the U.S. and China. I can't remember how many. I think it was a few weeks ago where, the U.S. would do a tariff, and then China would do a tariff, and then the U.S. would do a tariff even higher, and then China would do one even higher. We just go, back and forth, higher, and and then next thing you know, we're quickly escalating until like 200% tariffs. Just and then people were freaking out and like, oh my gosh, like how much, everything's gonna cost. But inevitably, that kind of trade wars can get very, very, very ugly really quick, especially if two countries really don't agree on a particular topic. So, but big thing is that tariffs can create revenue. In the past, the U.S. government solely relied on tariff revenue at one point in time. Now, this was like 100 plus years ago, but there was a time where the United States was majority of the funding for it was tariffs, not income tax, not taxing the citizens of the United States. It actually was tariffs. So somebody else was paying for it essentially, and not the American people, which I found pretty interesting. But and that brings into this essentially. Well, if we do have tariffs, how much more are we going to be bringing in? How much more? And that being said, of we can get more revenue for the United States. Well, how much more revenue are we going to get? So, as you can see, from 2021 to 2024, steadily over time, there's been a little more every year, consistently, year over year, in the billions. And the projected for this year is, I want to say, looks like a third more. Looks like a third more projected for the year. About $150 billion. So that's a significant increase in the revenue that the United States is going to get for tariffs. So that's really good for the revenue that we're going to get from that. And in 2026, projected, if things relatively stay the same and don't change next week, roughly looks like about 170 billion. Now, this is probably going to look completely different in like the next weeks and months or whatever it is, but this is as of now. So it's definitely going to be more than it was previous years, but no one knows how much more, unless all the tariffs literally get wiped off the table and we don't do them or something. But this is as of now. So, and this next slide kind of goes into, well, how much do we get from revenue from tariffs versus how much we have in the federal debt? Essentially, it's going to do nothing. For the most part, this slide just shows that we have way too much debt, and ain't no way tariffs are going to be like what it was 100 plus years ago, where it would pay off, all the debts we have, or would be able to sustain us without having to tax people, because tariff revenue is about 200 plus billion, which is nice, but the debt's over 36 trillion. And this chart, I mean, there's like a smidge green line that you could see that how much revenue you would get from tariffs and how much debt we have. Now, tariffs aren't going to make a dent really in it at all. I mean, it's so minimal. It's not really going to do much in the grand scheme of things, unless like we're bringing in like $1 trillion plus every year or something, or like if we had way more coming in from tariffs than we were adding to the debt every year, then maybe that'd be different. Like if we brought in like $1.5 trillion a year from revenue from tariffs, and we were spending $1 trillion a year, on the federal level, then obviously over time you would have less and less debt. But that would be in a perfect world, and that's not how it is. So, and like saying earlier, tariffs definitely have sent the markets into a frenzy. Markets right now really don't know what's going to happen. Markets are always forward looking, and they're always trying to predict what's going to happen. And if they don't know what's going to happen, it's all over the place essentially. So it really, how the market goes really depends on the tone of what the White House says. If the White House is being a little lighter on its tone for tariffs, then the market's going to do a lot better. If it's a lot heavier on its tones for the market, it's going to do a lot worse. So, and sometimes, the tone gets a lot lighter when the market really, really plunges. And if the market's doing really, really good, well, then sometimes you can go a little more heavier into your tone, into your tariffs, and how aggressive you're going to be with them. So, and then you got some people that, trade off that and have, bots that track the tweets and, do like minute trades based off, the news and whatnot. But most people watching this probably aren't doing that. And, I just want to bring this chart back just to kind of show that this is when no one knew what the heck was going on, really. I mean, I remember this week, this green candle right here, this giant green candle, that was like an 11% candle. And what happened there was that the market exploded when they found out that we were going to push off the tariffs. So when the tariffs were going to get pushed off for like 90 days or whatever it was, the markets completely exploded. I mean, they went up it was over 11% that week, which was asinine. I mean, I can't even, that was something else. And the weeks before, it was really volatile then too. But it's just to goes to show how much of a frenzy it really, really got during that time. And that might happen later this year, but we'll see what happens. We'll definitely see what happens. But just go more into it. This is just going more into it. I mean, what this means for people investing in the market. Essentially, tariffs, aren't just noise in the market. A lot of time, they really can affect businesses and how much their bottom line is. If you're making 20% less profit on a product because of tariffs, that actually does affect the business. So, and not only businesses, it affects currencies, and it also affects how people feel about the market. If people aren't confident in the stock market, they may not be investing in the market putting it flatlining or maybe even going down. So tariffs are very important, and they actually can affect the market. One of the biggest things aside from interest rates, which is another big topic a lot of people also have as of now. But yeah, watching what is said, not what is just passed, is crucial. Yeah. Things that are actually getting passed is what's important. There's a lot of things that are tweeted. There's a lot of things that are said. There's a lot of threats that are being put out there, but what actually gets passed, that's the crucial thing. So, and a lot of time the stock market is, like I said before, just forward thinking, and it's basing a lot of its numbers off of what it thinks is going to happen next. And so I brought this chart up to show that, let me circle the top stocks, that the majority of the top companies in the United States are forward thinking for the are based off of future values for the most part. Any PE ratio, which is price to earnings ratio, over 30 is there's a lot of thought thinking that there's going to be a lot of value down the line for that company. Now, obviously, with companies like Tesla and Nvidia, there's a lot of hopes for AI growth in the future. So the growth rate for those companies are really high. So they have a higher PE ratio because people think that the company's going to grow that much more down the line. So that's why those are really high. Now, if you look at United Health and you look at Johnson & Johnson down here, those PE ratios are down 12 and 17, meaning that they don't expect, typically, investors don't expect as much growth from them because they're not putting, an absurd amount of money into them, into the stock at least, making that gap between the earnings into the price of the stock. But companies that people believe in a lot, have those higher PE ratios. And I'm bringing this up because the higher the PE ratio, the more a stock can get affected by tariffs, because that screws up the future value completely. Like, if there was a giant tariff, let's say, on AI chips and all that, Nvidia and Tesla would just get destroyed, just because that pretty much annihilates a lot of their projected income 5 years from now, their projected sales 5 years from now, their projected how much growth they have from 5 years from now. Because if you're expecting like 20% growth, every year for the next 5 years for Tesla or Nvidia, well then, if those growth rates go down to zero, or not zero, but 10% even, if they go from 20 to 10, that can really, affect how people feel about having those really high prices for those stocks. So tariffs really affect tech because of that. And, as most people know, tech has the highest valuations because of their future expected value for those companies. So, and yeah, so that's the end of this video. I just wanted to go over how tariffs can affect the stock market and kind of where we're at now, and just what the outlook maybe even too, and we'll see what happens later on down the line. So thank you for watching this video. Please subscribe, and see ya. Bye.